Thank you so much for having me here and giving me this opportunity to speak. So today the topic given to me by my dad is diversification and asset allocation and why that's important. So this is actually a topic that's very, very dear to me. I have been a financial life coach for the last 12 years, helping my clients manage their overall financial life in a better way. We have come across many, many clients over the last 12 years that I have personally managed who have come to us in a complete financial crisis where a huge portion of their portfolios, say 70 to 80%, has been in one particular asset or asset class. I mean, we had one client who actually came to us with 85% of his wealth in one stock. He was a leading banker and his entire wealth was in a top bank that actually crashed. And he had actually taken a loan in order to exercise those ESOPs. So we've had such situations where, yes, we've had clients with 70 to 80% of their wealth stuck in real estate, stuck in gold for that matter, or even bank FDs. So while each asset class has its importance, it's very important to have a diversified portfolio, just as it's important to have a balanced meal. I mean, all of us know that if we go on a complete high carb diet or only a high protein diet, how detrimental it's going to be for our health. It's exactly the same way when it comes to your investment portfolio. So I'll just quickly take you through the various type of asset classes that we can look at investing in. The first most traditional form is, of course, debt. Debt is nothing but your fixed income instruments where you invest and get a fixed return. So this includes everything from your bank FDs, your Government of India bonds, corporate debentures, and also your various government backed schemes where you have PPF, NPS, senior citizen savings schemes, and various other options where you can invest for a fixed period of time, get a fixed return with a low risk profile, if I may say. So this is suited for investors who have a low risk profile, who are looking for a fixed income stream, and who are not very comfortable with too much volatility in their portfolio. The next asset class is equity. Equity, by virtue of its name, means ownership. So which means that if you were to become a part owner or invest in a business, you invest in equity. So this, includes everything right from your stocks, investing in the share market, investing in equity mutual funds where you invest in a basket of diversified stocks, which is professionally run by a fund manager. It includes private equity and all of that. So typically when you invest in a business, of course you are assuming more business risk than you would be if you're investing in an FD. And as we all know, higher the risk, higher the return. So yes, in equity, we can definitely, it's one of the only asset classes where you can get a double-digit post-tax return because of the business risk that you're assuming. Having said that, of course, it does come with the risk of volatility, and if not done carefully, there could even be a chance of capital loss. So it has to be done with a lot of professional advice there. So while debt and equity would form a bigger chunk of your portfolio, there are other smaller asset classes as well that should be part of your portfolio. One of them, of course, traditionally being Indians are the highest investors in gold. So yes, there should be some amount of gold in your portfolio. Again, this may not include your personal jewelry, which us as Indians do have a lot of. But even besides that, you could look at adding, about 5% of your portfolio in gold through gold bonds or gold ETFs or funds. The next one being real estate. Again, real estate is something traditionally as Indians we do have high allocation to. Apart from our residential homes as well, there's land, there's commercial property, extra homes as investments. So yes, we could have some portion of your portfolio in real estate as well. There are two new asset classes, if I may say, that have gained popularity over the last few years. One of them being international equity, where basically you can take access to global markets by investing overseas and investing in the top stocks in the US and top businesses there. And why just US? In fact, across the globe. Again, this is something where we could look at adding 5 to 10% of our portfolio there. And last but not the least, I know this is not for everybody, but yes, crypto or digital assets, that is something that it is an emerging asset class, not yet very regulated and accepted in India, but I attended a conference in the US in October, investor conference, and the scale at which it's coming up globally in developed markets that we see is phenomenal. So definitely there is some potential there, but I think we have some time to go there from an Indian perspective. So broadly, these are the various asset classes do exist, but as an investor, we must seek professional guidance in order to create a portfolio that is best suited to us based on our time horizon, based on our risk profile, and based on various other things. So, of course, it's important to have a portfolio, that beats inflation. We are living in very high inflationary times. I mean, as we all know, we are seeing record high inflations globally. And yeah, so it's very, very important to have a portfolio that is able to beat inflation, that gives you a high real rate of return post-inflation. But it's most important to sleep well at night. And yeah, so ensure that you have an advisor who gets you to do that and not just invest in products. Yes, of course, I know we do live in a world where we are investing in products and investing in the latest stock and doing all of that. That's great, but you must have an overview of your overall financial life and your overall portfolio across advisors, across all of it. And yeah, so we must do that. That's all. Thank you.
Thank you, Riddhi. You gave good insight on the investments we could make. Any questions from your side?
There is a question. How to get the money first? Sumati, over there. Please give the mic.
Riddhi, it was really an enlightening insight into the investment portfolios. I would like to understand, there is something like, you mentioned about cryptos. So now I think there's a new asset class coming up, like a tokenization, which is acceptable in India also. So, Ms., what are your views on it?
So the thing is that, yes, it is getting more and more accepted in India. We are seeing tokenization, happening across industries. But the thing is that, pertaining to this overall, like I'm talking about crypto or digital assets as a space, I feel like an investor has to know it first thoroughly, understand the risk behind it before just jumping into it. So we actually have a US firm as well. Like we've set up an office in the US where we are offering crypto investments directly to our clients. But you have to be extremely careful about, before getting into it. You have to have knowledge. You have to be able to bear that volatility before getting in. I mean, we had clients who got in and who saw their wealth crash by 80% in a few months. So while, yes, there is a lot of scope and tokenization is going to, I personally believe in it. I believe in the blockchain. I believe in the entire platform. But I think it's going to take some time for us to really see it evolve over the next few years before we can take allocation to it. Yeah.
Hi. You see, a lot of us are in business and we have, this is a very enlightening thing, it gives new ideas. So we have lots of land which is with our businesses, in our factories,
Right.
etc. When you talk about a portfolio, would you consider lands in factory or lands or other kind of properties that you have, offices, commercial, etc., as part of the land portfolio, or would you consider land other than these? Second, would you consider something like a REIT, real estate portfolio, or would you consider it more like a debt portfolio?
Okay, good question. Okay, the first question being land, whether it's personal land or business land in terms of factory or a commercial space. Typically, when you are doing an asset allocation for yourself or your family, you should only look at assets which are in your personal name. So one thing that we've seen across our business owner clients is most of their wealth is within their business. And it's very difficult to kind of diversify and pay yourself a salary and pay taxes again and build, assets in your personal name. But that's extremely, extremely important, because till the assets are in your business, they're in your business. They're not, they're not to be considered, considered in your personal net worth. So I would say that no, you should not include your factory land as part of your personal asset allocation. If there is any land or commercial property even that is in your name and not in your business name, your personal name, then yes, it should be part of your personal allocation. But having said, as business owners, we must look at transferring wealth to our personal name and to the next generation, from a very early age. And we are seeing that change in the next generation come in. As we are dealing with the second generation of our business owner families, we're seeing them starting off doing that at a very, very early age, and that's extremely beneficial. And the second question, which is REITs, I think it would be kind of fair to consider it as a real estate allocation. Yeah, because it is investing in commercial spaces and in real estate companies. So I think it would be considered as a real estate allocation. And it's more liquid than actually going and buying land. I mean, we've had clients, in addition to what Sir was talking about, we've had clients who've passed away with 80% of their wealth in land, and the next generation has not even been able to monetize it, because it's either been, the papers are not in place, or it's been encroached and stuff like that. So, yeah.
Normally, these REIT funds, I've been inquisitive, do they even consider the value of the property, or they only consider the rental yield on that property when they're considering the REIT values?
So it depends on the kind of REIT as well. I do not have extremely in-depth knowledge about REIT, so I think it would be better for me not to comment on this.
Yeah.
But I do believe there are different kind of real estate funds that, that are structured in a different way. So some only invest in properties from where there's a rental income coming in, and some actually invest in upcoming projects or actual properties with developers, and you can kind of benefit from the appreciation there.
Okay, fine.
Yeah.
Thank you.
Thank you. Yes.
Not sure how this thing works. What are your views on art as an investment? Because you mentioned about several things for investment, but you didn't touch on art. And
Yeah.
art is losing its shine because of the new digitalization of EFTs.
NFTs.
NFTs, sorry.
Yeah, yeah.
So what are your views on art and perhaps maybe NFTs?
So art again, I know I didn't touch upon, art as well as collectibles. There is a large portion of us who, of course, view that as an asset. It is, but at the same time, I feel like it's not really liquid, and there is no liquid market for you to really, really monetize it. Sure, it can be part of your portfolio, but a small percentage. There is long-term appreciation. I mean, if you do invest in art with a famous artist, you know that few years down the line, you will be able to sell it and there will be appreciation for sure, but it's uncertain as well. And as you said, NFTs are now, changing the landscape of how we see art. So, yeah, some portion, but not too much. Yes.
I'm going to take the next
Okay.
one.
Yes.
So, people who have businesses over a period of years, they have money, they can invest. So, people who have startups, how would you ask them to handle their portfolio because they have no money. They are on, minus back, cash back. Basically, they don't have money to do business. How will they manage? And there are a lot of startups right here, like the angel investors. So how would they manage their portfolio?
So of course, they don't invest, but having said that, whenever they do turn profitable and they do have funds, start investing early. Like if you ask me when is the right time to invest, it was yesterday. Start investing, yeah, as soon as you can. Yes, as soon as they make money.
Thank you, Riddhi, for the question answer session.